to Deerwood Realty YouTube channel. I'm John Schink, founder and managing broker of Deerwood Realty in St. Louis, Missouri. Well, we have gotten a record in St. Louis, a record around the country. What is that record? Well, let's get to the article right away. It says, pending home sales dropped to a record low, even worse than during the financial crisis. So congratulations, everyone. I just know from my own experience that the last couple of months have been ridiculous. Not only have the transactions have fallen off a cliff due to the 8% mortgage rates, but we're being sued left and right by every single person in the United States, it seems. I guess it's a class action suit. So, I mean, it's just been a really wonderful time to be a real estate agent. I remember what it was like after the great financial crisis. They said we needed to get our fingers printed. We needed to get fingerprints. That was the net result of that. Now, who knows what's going to happen? But I'm just saying off the top, not a lot of transactions is not good, right? Not good. And even for the economy, like I don't like this boom and bust. The Fed is responsible for booms and busts, right? We don't want that in our economy. But they've got the mandate and they manage to screw it up every time. I would just like a nice balanced market. I would like buyers to be able to look at a few houses and find one that they really like, pay a good price for. I would like sellers to make a profit on every sale of every house that warrants it. I mean, if it's a hoarder house, I don't really feel like paying a lot of money for that. But I'd like everyone in the marketplace to do well. I represent both sides. I did not enjoy this recent run for the buyers because it was so brutal. And for the sellers, to be honest, I think some of them were a little greedy. I mean, that's where I'm at. So let's get into the article a little bit here. It says, pending home sales, a measure of signed contracts on existing homes, dropped 1.5% in October from September. Well, that doesn't seem so bad, right? They hit the lowest level since the National Association of Realtors began tracking this metric in 2001, meaning it's even worse than readings during the financial crisis more than a decade ago. Sales were down 8.5% from October of last year. Now, look, I think the problem is there's not a lot of homes for sale. I do think it's an inventory problem, and I've talked about this a number of times, but it's tough to explain the way I want to. But there is a lack of homes available for sale. Okay, so you could say that's a lack of supply. All right. My main point has been there's plenty of people that own houses. Okay, they're just not selling them right now. There's plenty of what I would call phantom inventory. There's plenty of rentals and things of that nature that just aren't being sold because right now the profit motive is still there. I suspect as we go on that the profit motive will decline when you get your new tax bill for the year and when you get your new insurance bill for the year. I think that some of this stuff is going to come to an end. But right now, when I take people out to look at houses, the people that I do take out now understand an 8% mortgage rate. We haven't been taking many people out. But even when you do go out, the houses are just seemingly overpriced for what you're getting. And then on top of that, it's just the overpriced is, it's not just that, but there's so much work that has to be done to the homes to make it even livable. It's one of those things that I do understand the inventory issue firsthand. I mean, I can see that. It says, because the index measured signed contracts, it's the most recent indicator of housing demand. It reflects the buyers who were out shopping in October, which was when the popular 30-year fixed mortgage rate briefly shot higher than 8%. Now, that's true. I mean, it did shut things down. Now we've had things come off the 8%. Now we're down below 7.5% on a 30-year fixed. But I don't know that really matters. Once you got to this level where it became uncool to buy a house, people stopped buying houses. It's kind of weird. But again, it's the human nature. So it says, the realtors continue to say it's not just high rates, but still very low supply of homes for sale that is deflating activity. I do agree with that. If there were more inventory, okay, there would be more transactions. It's just what is out there isn't what somebody really wants to buy. It says recent weeks of successive declines in mortgage rates will help qualify more home buyers, but limited housing inventory is significantly preventing housing demand from being fully satisfied. Lawrence Yun, chief economist for the National Association of Realtors, said in a release, multiple offers, of course, yield only one winner, with the rest having to continue their search. And there are still places where there are multiple offers. It's crazy. I mean, especially this at 8%. I mean, and the rise in home prices, it's just crazy. It says tight supply and still strong demand have kept pressure on home prices, which not only continue to hit new highs, but appear to be accelerating in their gains. Now, look, this cannot go on forever. I mean, it just can't. It just can't. It's just a bad situation. What's going to have to happen is that people just don't buy houses. That's the only way the price is going down. Now, that's not good for me on either side. And you say, well, John, no one's buying houses now. That's why the transactions are so low. But there's just so much pent-up demand. People still would want to buy if they could find something. I'm not sure that that this number is going to be, I don't think that this number is significant in the sense, I think that it's going to go even higher as far as number of, higher as far as there's going to be even fewer transactions going forward. Understand, seasonally in real estate, we're in like a slow month. I mean, once you hit about middle of September, things slow down, at least in the St. Louis market, until April of next year. I mean, that's not unusual. You make your money in the summer, save your money during the winter, and go back out and try to make money again. It's a very cyclical deal here. And so, with November being, historically bad, or October being historically bad, November I don't think is going to be that great, based on the phone calls I've gotten. Then you get into December and January, it's not looking real positive. There are seasonal reasons why the numbers could get even worse. It says the realtor noted that the sale of homes priced above $750,000 have been increasing simply because there's more supply on the high end of the market. And you have to ask yourself, why is that? Why is there more supply in the high end numbers? Well, quite simply, you try to finance a house at 8%. That's $750,000 and see what your payment is. It's ridiculous. So that was the article. I had a few little questions that I thought we could go over as soon as I get to the right page. It says, what strategies can potential buyers use to navigate this market effectively? Well, look, the way I look at houses and the way I help buyers is simply, we go look at a bunch of houses, okay? We physically go see houses and we compare them with the other ones in the market. And I'm telling you, time and time again, you will see the one house that it makes sense, okay? It happens every time. There's always this one house that makes perfect sense. Now, during the busy times earlier, the problem was 30 other people saw that same house. But during a normal market, you can buy a house and not feel regret. Basically, you want to find a house that you can enjoy from the minute that you buy it. As soon as you find that, what difference does it make what it costs over 30 years? Understand that we have to be thinking long-term on our purchase. And then, how should sellers adjust their expectations and strategies in response to the market shift? I believe that you have to have pricing that's like relevant and recent. I don't feel like what somebody got when rates were at 3% is what people are going to get now. I've been proven wrong. It hurts me to say that I've been wrong, but I've been wrong. Prices still keep going up. So, to me, that should be qualified by the inventory. And what I mean by that is if you're providing a new move-in ready home or a nice move-in ready home, okay, that house is going to get a premium to the house that needs to be remodeled, since it hasn't been done since the 80s. Because nobody seems to want to take on those projects right now and pay a premium for it. That makes sense to me. I'm totally okay with that. One of the questions was, how do current market conditions compare with the predictions made earlier in the year? And I think people did assume that home prices were going to continue to rise, but I also think that they thought mortgage rates were going to go down. I don't think that people thought that they were going to continue on their march higher. Now, at this 7% rate, who knows what's going to happen? Even if it goes down, the prices have gone up so much that you're not really getting any sort of value there. And then it was an interesting question going forward is what long-term strategies to be considered to stabilize the housing market. I'll be honest with you. I think one of the things that should be looked at very seriously is if it's an investment home, okay, and define an investment home as one in which someone else, a non-owner occupant, is living in the home and there's rents being collected. That should be taxed at a different rate. I just don't, at a higher rate. I just don't think what's going on right now is good for the overall country. I mean, I think investing in real estate is great. I have no problems with that. But what I'm seeing is so much competition from Wall Street to just people around town able to buy so many houses out from underneath what would be a family or a single person or anyone. It's just making it unaffordable for everyone. So I think that would be a long-term strategy that should be considered. But I also know that it probably won't be. And then as far as my predictions for the housing market in the next year, I think we will see more inventory because I think sellers have held off on selling for a while now. And I think people just get to the point where they just give up. They're like, you know what? I want to move. I'm selling. I'm done. That also happens with death and divorce. So you're going to see it in those spaces all the time. So that's what I have for you tonight. I don't know. What do you think? Put your comments down in the discussion area below, and let's just talk about it. I mean, it's not good if you're a real estate agent right now. I don't know anybody else, but I know that it's been a struggle for me over the past couple months. It's been brutal. But I understand market cycles, and I've kind of prepared myself for this for years, so it's not so bad for me, but others I'm sure are hurting. I know lenders are just getting killed. With that, I'm going to head on out. Thank you for watching. Thank you for listening, and I'll catch you on the next one.